Welcome to episode 2 of Ron's Cryptotherapy. So today is a really good episode. Like I've mentioned a few times in the first two videos, uh, I've I go on these streaks where I'll hit a lot of consecutive Bitcoin trades in a row. And when I do that, I'm really using the same strategy. It's actually a conjunction of two strategies. And I came up with this myself based off just price action and strategies that I knew. And I've been doing this for a while. And so for this year, using this strategy, I've only lost with it once. Um, and you'll see what I mean by that better when I explain it. It's not something that I can do every day. You have to let the conditions come to you, and when I see the right conditions and I get in and I use it, it really does. I'll go on these streaks. I'll hit 7 in a row, 8 in a row, 10 in a row. One time I hit 21 in a row, and I'm not lying about this, guys, because once I explain this, I have this chart here that I keep most of my trades on, just for like historical purpose or whatever. And we'll scroll back on the chart and I'll show you, like, using this, it plays out over and over and over again when the conditions are present. Like, I'm not making this up. I promise I'm not lying about this. So I'm coming right off the gate. My third video, I'm going to show you exactly what I'm doing with this. I'm going to show an example that I posted on Twitter on April 16th, starting with this move. I tried to update the trades as much as I could in real time and showing how I went 6 for 6. It was actually 7 for 7. I didn't post one of the trades or mistyped it or something like that, but I actually went 7 for 7. And I'm also going to take you back and show you the one that I lost this year, like this, using this strategy, because I did lose one time. And I'm also going to show you on some examples on some different time frames, because it does, the time frame you're looking at does absolutely matter. So anyway, the 1 hour is the main time frame that I look at, so that's where we're at right here, and we're going to start from here. And I have it, there's a replay back to April 26th when I initially saw those conditions, and we're going to play it one candle at a time. Hopefully this doesn't take too long, but if anybody who wants to learn, I guarantee if you stick to the end of the video, you definitely will learn something. Just something real quick about me. I don't really care. Like, if I ever get 1,000 followers or subscribers or whatever, I probably won't even monetize the channel. I don't care about that kind of stuff. I love trading. I love crypto. I like talking about it. I like talking to educated talk about it. So, people that want to, I think lots of times people want to be validated. They want to either hear it's going up or it's going down. Like, they want the big move right now. And that's just not how this game works. And that's why those people normally tend to have the most followers, because they're saying what people want to hear. And that's just not me. I'm going to say what's educated. I'm going to say what's technical or whatever. So anyway, we're going to play the playback and see what happens. Okay, so this is when the move starts and the strategy starts. What I'm looking for is a breakout out of a tight trading range. So I'm looking for a big candle closing above or below structure. I don't care which way it's going. You have to be ambidextrous in this. I don't care if it goes up or down. I just want to know, be in the right side of the move. So when lots of times with tight trading range, people they're like get bored, like, trading range, well, there's nothing going. No, that's when you need to be ready, because the move will happen out of that tight trading range. Something you can use to help out with that is Bollinger Bands. You can keep those on the chart. When Bollinger Bands start to get tight, that'll let you know that breakout's probably pending. And sometimes I can look in the range and I can kind of get an idea of what side is winning the range, bulls or bears, and I can even take early position. Now, I didn't do that here, but I'll talk about that in later videos, how you can kind of look at a range and tell which side is winning. But anyway, so this is the start. This is what I'm looking for. I'm looking for a candle clearly breaking above or below the recent structure. If you want to say like a rule of thumb, the last 20 bars maybe, but you just, it's more of a thing you get with experience that, okay, this is the recent structure. It's closing below. You have to go back here kind of far, like down here. And I even said on that Twitter post, this could be a double bottom, but I'm going on continuation. I said that on the original Twitter post. It could be a double bottom, because there's always going to be another case. But look at that candle straight down. Markets have momentum, and inertia. You usually don't turn around like that. So that's why I didn't think this was a double bottom. Now, if I got some kind of leg that looked like this all the way down, bull bars and bear bars going all the way down to here, then yeah, I'd be looking to go the other way. I'd be looking to go up. I would think it was a double bottom with some kind of structure over here, and you can look far to the left for those kinds of stuff. And I try to be a price action trader. I don't look at a lot of indicators. I really don't. And the best traders are always price action traders. And that's why it can be kind of hard to explain these things to somebody sometimes, because price action trader, you're like reading the psychology of the candles, and you can't always say, when this happens, do this. You have to kind of read what's going on. But anyway, I'll set this as a 1-to-1 trade, and some people might be like, well, 1-to-1, that's not a very good risk to reward ratio. Well, there's a third probability that a lot of people don't talk about, or a third factor that a lot of people don't talk about, and that's probability. So if you have a really high risk reward, like 5-to-1, the probability of that trade is probably pretty low. And I'm not saying you don't ever hit those, but generally speaking, the lower the risk reward, the higher the probability, and the higher the risk reward, the lower the probability. So when you get these kinds of moves, I always set them as a 1-to-1, and it doesn't mean that I'm gonna let this stop get hit if I don't like the price action follow through. I'm just gonna go, just let it, whatever, and go up and tick, because that is a wide stop. It's more of a safety. It's more of a safety net in case we do get some news or something comes out and it goes this way. But I also use it as a measuring gap from the top of this candle from the stop, and put a 1-to-1, and that's where the take profit is. If I don't like the price action follow through, then I'll try to manage my way out of the trade at a break even or small loss. But I set the order, the entry, below the low of the candle as well. You can see over here, that's the low of the candle where the wick is, and I set the order just below that. So that way, if it doesn't continue in that direction, I don't even get in the trade. And if it does, if I get an immediate like bull bar, or even an inside bar if it's an inside bar and a bear candle that doesn't hit that low, then I may just enter right then, because then you're getting bear follow through. But if I get a bull candle right there, then I'll take the order off, and I'll just continue to watch it and see if it bear flags and go from there. But I set it below the low of the candle, and that saves me from getting in a lot of trades that don't go my direction. Especially if you're trying to do this and you're misreading it and it's more of in a range, well, then you can get big candles down, big candles up in a range all day long. That's what it does. So by getting a little bit worse entry, instead of going at the close of this candle, I go at the low of the candle. And yes, it is a little bit less entry, but you're increasing your probability, and you're keeping yourself out of a lot of bad trades. So when I get that initial conditions, I set it as a 1-to-1 trade based off that candle, based off the breakout of the candle and the length of the candle. So after that, I use another strategy that I've learned, and it's based off the 20 EMA. So I set alerts on my phone based off of various time frames. Now the first that will be hit is the 15-minute. So that's what I'm looking for at first, and that's what we'll run the playback. But I got them set for the 30-minute as well, and the hour, hourly. And the hourly is the main time frame that I look at. So I'm going to run the playback on the 15-minute here, and we're going to show what I was seeing and how I got into these trades. Okay, so we get it hitting the 20 EMA on the 15-minute time frame. So bam, an alert on my phone went off. Immediate bear follow through, exactly what I want to see. I'm under the premise that we're going down. I bet if you took a fib here, it's probably even at a fib level where it bounced off of. Yeah, right at 38.2, which is good. That means you want a better price if it's going back that direction. So once it hits the 20 EMA, and then you get a bar going in the direction that I want to go, I set the order below the bar, the stop above either the high of the candle or the EMA, whichever kind of makes sense, and I set it as a 2-to-1, as you can see there. And that's it. John, he's got a 20 EMA strategy that I think is kind of similar to this. It's the same overall kind of concept. The guy that I had learned this from initially, he said to use the ADX, which is like a trend indicator oscillator. It tells you like how strong the trend is, and he says like make sure the ADX is above 25. And I don't do that because I only do this in conjunction with this price action kind of move that I see. The ADX, I think that's fine if you use that. But this 20 EMA strategy, I would not recommend using it in trending markets and stuff, or in ranging markets, only if it's in a good trend. And this is a great way, once the move started, a lot of times people are like, well, shit, I don't know, it's too late. The move's already started. This is a great place to give you some direction for an entry and to continue with the move. All right, so we get this touch of the 20 EMA, immediate bear follow through, and that's what I want to see, and that's how I set the order. So keep running the playback, and that's trade number 2. Number 1, over here, the breakout 1-to-1, second trade off the 15-minute 20 EMA, and I set it as a 2-to-1. And then I get the immediate bear follow through. That's exactly what I'm hoping to see. All right, pull back to it. And sometimes if it's a bear bar that pulls back and it closes bear, then I'll just set the order below that bear bar. And here it looks like I may have done the body instead of the wick because I'm already thinking that it's going this way. Sometimes I may not enter the second one if the first one isn't playing out like I thought. And you see it's kind of back to the entry of my first one. However, if you look at the price action, look, just nice bear bars trending down, most of them closing on their lows. Bulls trying to hop in there, but really not getting much momentum. I mean, as soon as they started to get to the moving average or the average price, it turned around. And like I said in the last video, it's no magical EMA. It's not that the 20 EMA is magical. Just think of the 20 EMA as kind of average price. So when it's coming to the average price, it's getting rejected, which means bearish sentiment. So I take the second trade there. Or the third trade, excuse me, the second one off the 20 EMA. All right, and here's number 4. I think I did it, I must have set it right here below the body of the candle. And I guess once it's kind of in trend, I'll start using the bodies instead of the wicks of the candle. But you can see these other two that I took off the 20 EMA, they were hit, or this one was like maybe, might have got hit. It's like right there at the bottom. In any event, I mean, it's going my direction. I'm in pretty good. I'm actually a little bit negative on the initial trade because it did come down and go in that, but I'm not worried about that now. It's still going in my favor, and I'm hitting these other smaller trades at this point. And now that one, so all those 20 EMA trades are hit. All 3 of them off the 15-minute have been hit. They're closed out relatively quickly. Now I can know just from looking ahead, because I have it labeled, that nope, there's one more off the 15-minute. Yep, because then eventually it stops bouncing off the 15-minute, and I go to the 30-minute. So here I took another one. And, it didn't actually touch it. At this point, I was awake. So these other trades, I don't know if I mentioned this, it was in the middle of the night in the time zone that I live in. But I set alerts on my phone, and I set them to where I'll wake up. Now, if you want to be a crypto trader, that's how it be sometimes. You got to wake up in the middle of the night. But I already know what I want to do when the alert's set. So I'm not waking up and trying to analyze a chart, after first waking up. I'm really just looking to see if what I thought was going to happen is going to happen. I set the order and go back to sleep or whatever. Normally I can go back to sleep. It happens 2 or 3 times and I'll just stay up, which is what happened here because all this was in the middle of the night, those alerts off the 15-minute. So here it didn't actually hit it, but that's close enough. It's like I said, it's not magic. Just look at it as like the average price, and you get that big bar, bear bar. So I did another trade. This is number 5 total and number 4 off this EMA. And now I'm also in profit on the bigger trade. And next candle, big dump. So that one was hit quick. And I'm going to go to the 30-minute because, just looking ahead, I know the rest of them are taking off the 30-minute. I didn't take any more off of the 15-minute there. But you can see, what was that, 4 successful trades in a very short amount of time. And I'm well in profit on the initial trade that kind of got me into this whole move in the first place. And look at how close that, and I may have had it set as it may have gotten picked up there, but that's not an accident that these one-to-one measure moves, like so many traders are looking at that off those breakout candles. So I'm not sure in real time if that wick closed my trade out. I mean, it ended up being successful anyway, but you can see that's not an accident how it was so close to that. Okay, now we're getting it on the 30-minute, but that's how long it took for the trend, and that means there was a lot of eager sellers. So now it's hitting the 30-minute. I'm using the same strategy. Once I get bear follow through the other way off the 20 EMA, look at where the order is below the low of the candle, and there you go. And here it's touching it again, and I did the same thing. You can see with that, once I got the bear candle, I set the order below the bear candle, and there you go. And 7 for 7, and that's how it happens. And then let's see, I think we actually started to get reversal after that. Yep. So that is exactly how I do it. This EMA strategy is so easy. You just let the price come to the EMA, and once you get it going the other way, you set the order below the candle, the stop above the candle, the EMA, whatever makes sense. And I set all these as 2-to-1 trades, except the first one is a 1-to-1 off the initial breakout, but you see they were all hit in a very short time frame as well. So I said that I would show like one that I had gotten wrong with this. But see, when I show you this, you're going to see I didn't lose a bunch of trades when it didn't work out. If the initial trade doesn't work out in my favor, then I don't get into the subsequent trades after that. And that's what's so good about this strategy. And you'll see on my chart, I keep this chart with all these trades up here just to kind of go back for historical reference or whatever. And I'm doing the same thing over and over again. You know, I really am. You know, it's a 30-minute. Let me go to the hour. That's why I was taking a minute. I mean, look, breakout, closing above the recent structure, set the order above, goes up. These trades you've seen in here, they're probably off of EMAs on different time frames after that. So I have this marked here to show you that, okay, this was one breaking out of a tight trading range. So I put a smiley face there because if you set the order above the high of the candle, then you never get into this. Now, if you had done the body there, you would have gotten got. And that can happen. That's why you want to make sure, even sometimes, you know, depending on how it is, like this is kind of a long wick. So that's why I wouldn't have set it just like above the body like that. Because it's already showing some rejection. So I wouldn't have loved that one, but it shows you if you would have done this strategy here, as long as you wouldn't have put it right above the body, you never would have gotten the trade. Yeah, and you know, look, candle breaking above structure out of a tight trading range. Look at where I put the order, right above that. Then as it goes, you know, all these trades, I'm quite sure that I'm riding 20 EMAs after the initial breakout on various time frames. I'm doing the 20 EMA. Here is another one, like where you would have okay, so closing above structure, a tight trading range. You know, you can't see all this up ahead at the time. So if you would have set the order, you know, to go long there, you wouldn't have gotten filled and you never would have gotten in the move. See, and I was actually short here after this big dump. You know, at this point, that's not the best example because of this big candle over here. I'm looking to go the other way. The only reason it ranged so far, such a tight trading range for so long, this happened on a Friday, I think, late Thursday. Yeah, so this was like over the weekend. But as soon as, you know, Monday came back around and people started trading again, you see it started to trend down, and I hit that. And I'm pretty sure I'm getting close to, but you see all these winning trades before I'm showing you the one time where this did not work. And you see all this time where price is just ranging. I'm not taking any trades. I'm just waiting for the conditions that I want to see. So here it is right here. All right. And I had been doing really good riding this trend up. And, you know, the same kind of strategy. You know, I set this. Once you see that, it looks like it's going to break out. So I set the order above these candles in case there was a big candle that came up. And that's exactly what happened. But this is the one that didn't work. So you get the big candle closing above all this structure. It looked pretty good. And I set it above just the body. But even if I had done the wick, it still wouldn't have mattered. It went up there, got that, and immediately turned around. Immediately turned around. But see, I didn't get into the subsequent trades after that. So no strategy is perfect. You know, you can still lose. Just so if you get a breakout candle closing above structure, don't put your whole bag and 10x leverage it, because it's still no guarantee, but it is something that does tend to play out. As I go back on this chart, I mean, you see, it's the same thing that I am doing over and over again, from breaking out of tight trading ranges. Look here, this goes back to when it was just breaking out of the basement. But look, I saw this. We're breaking out. It's coming out. You know, tight trading range, closing above structure. Set the order just above the high of the candle. Now we're off on the move. Look, candle breaking above structure. Set the order just above the candle, and then looks like here I'm riding it off of off different EMAs. So, and I don't want to spend a bunch of time scrolling back up through the chart, but there was, okay, I have a few places marked on the chart where it was, I think it was a different time frame that I wanted to show the example of. I think it was right here is one of them. So here you get the close. It's on the 4 hour here that you got the close of structure. So if you break it into I don't want to lose my place on the chart and going back to the 1 hour, but if you go to the 1 hour, it was a good breakout candle, but it was like here. So I wouldn't have wanted to take that yet, because I don't know, it's not really above structure yet. It's not above this candle. But then the 4 hour closed here. Well, now you feel good to go up, and you know, it doesn't have a window up here or whatever, but this is one where it would have worked. But if you were looking at the 1 hour, you may have been a little hesitant until you get that 4 hour close up here, and then it looks good. So like on a 1 hour, what you probably have is a bar closing around structure, and then you get the little follow through bar. Matter, I'll look at it on the 1 hour. Yeah, so you get the breakout, but it's right there at like some of the structure. It's not quite closing above, but then you get the follow through bar. So this is what it looked like on the 1 hour, where you guys saw on the 4 hour, it's showing clearly breaking above structure. Now this example I have over here, all right, closing above structure. We're looking at the 1 hour right here, but look, it didn't keep going. All right, but if we look into the 15-minute, if you look in the 15-minute, that if you're taking off the 15, broke above this structure, you set it as a 1-to-1, that's exactly where it hit. And you know, with these 1-to-1 initial breakout trades like that, if you don't like the price action after that, then you're not getting into these EMA trades. It's only as it continues to go in your direction that you get into these other trades with the EMAs, and ride the trend. So hopefully that made sense. You know, I don't want to keep rambling on. I hope everybody understood the strategy and how I use it. And by looking back on the chart, you can see it just continues to play out over and over again. And I showed you the one place where it didn't play out, and I did take a loss on that one. And also how it can play out on different time frames, how depending on the time frame you're looking at, and you want to be conscious of that. So anyway, I hope that everyone got something out of that. And this coming up week, I'm going to try to put out a video talking about the overall market cycle. The bottom is the bottom end. What could we expect to see, and the different scenarios that could possibly be on the table to play out. So I appreciate everybody who tuned in and got something out of the video. Appreciate it. Later.